Hello guys, great day for everyone listening my discussion about discounted cash flow method. We will use discounted cash flow method to evaluate the so-called intrinsic value of the company, whether the current price is fair based on a calculation. Of course, this method is not a perfect method to calculate the fair value of the stock, but this is better than doing nothing, and we can come up with a good estimation. Of course, not only the numbers decide whether we should pay or we should buy the particular stock. There are so many other aspects to determine, so whether the business has a moat, whether has competitive advantage, whether the company is in growing phase and investing, so a lot of other factors. But I will show some examples how to calculate the intrinsic. As you can see, I did several calculations. These companies are mostly in my portfolio, but I would like to show you one example, and Microsoft is a great example. So I used the earning. This is 7. This is the latest earning of Microsoft. This is just an approximation. You can go to Morningstar, go to Microsoft, go to key ratios and full key ratios data, and you can see the trading 12 months is 7.34. This is the latest number, and I expect that company will grow 40% for next 5 years and after 30%, and my expected return is 10%, and after 10 years I estimate that the terminal multiple will be 30. This is the first scenario, and based on that the intrinsic value is 371, which is higher than the current share price. If I use more realistic numbers, so the same growth rate but the terminal multiple 20, then it's suddenly then it's 275, and it's more pessimistic scenario 3, then the terminal value is 15 at the end, then it's only 228, and I gave each scenario probability. The first scenario is 40, second scenario is 30, and the third is 30, and from that I calculate the probabilistic value, and from that the fair value is 300, which is higher than the current price. It means we have some margin of safety to invest in Microsoft. Of course, these are just calculation. We don't know what the future will brings, but we have to somehow predict the future. In case of Microsoft, this is a pretty easy task because Microsoft has earning, and we can have an expected return in the future. But let's see what to do with a company such as Palantir. So these companies obviously have no earning, but somehow we have to estimate what earnings in the future can generate this company. This is much harder job than estimating Microsoft, because if Palantir fails, then the share price can go to 0. And if you go to Palantir stock price, this is $20, and check the key ratios, full key ratios, and we can see Palantir has negative earnings. So we don't know in which year the company will start to generate profit. So there are certain methods. So we can say that the company generates for the first year $1, but we can say that also the company will not generate anything in the next 5 years, and after suddenly will grow. So there is a lot of uncertainty in such companies, but of course the gain can be tremendous. So I only did a growth rate 30 for the next 5 years and also 10 years, and started at 1. Then in that case the Palantir share price can be much higher than the current price. But of course it's just a theory. And if we start with the lower growth rate, the Palantir share price is even lower. And also if we just normal growth rate 8%, then we are below the current share price. And with the probabilistic estimation, we got a pretty high number. This is 76 US dollar. But of course, we don't know what the future will bring. It can happen this company will not generate profit at all, and it will burn the investors' money. So even though you put the numbers, you put the best effort, you don't know what the future will bring. So this discounted method, it's much better for established companies, but also there are in established companies there are a lot of uncertainties. So you don't know what will happen in the next 5-10 years. So maybe Microsoft will not be as profitable as today, and we don't know simple. So this is just a play. You have to consider a lot of other factors, such as the moat management, how the trends in the industries. So basically you have to think about a lot of things, and not just rely discounted cash flow method. I really hope I could provide some value with my discussion about discounted cash flow method. I think it is a great method to predict the fair price of a share, but you should be careful relying on this number, because a lot of things can happen in the future, and this is just a number based on the financial number. As I mentioned, a lot of other factors can play a big role in the share price. Thank you very much for listening, and I wish you a great day.